Welcome everyone. Thank you for coming. Fantastic event, fantastic panelists. I feel very honoured. First of all, I wanted to thank Shepard Mullen, and Dan is going to have a few words. Thank you.
Thank you, Gemma. This will be just a few moments. Thank you so much, everybody, for coming. My name is Daniel Cloak. I'm an engineer and a lawyer here with Shepard Mullen, and we're excited to host this event. I'm excited to be a part of it, to not just host it, to be a part of the community, a part of that discussion. One of the reasons we got into law, or I got into law, particularly here in Silicon Valley, is to be a part of something new, something developing, some new opportunity. 10 years ago, I could never have dreamed that something like the discussion we're having today is a real opportunity. Now, there's been over 100 ICOs this year alone, and my understanding is Bitcoin itself has topped over 10K as of today. It's an amazing economy, it's amazing opportunities, and it's great to be a part of companies and clients to work together to create some new opportunities out of something that no one's ever dreamed of before. It's a real opportunity to be here. It's also an opportunity to, of course, work with the new legal regime, some things that are happening. I think the SEC has been dancing around this for some time, and I'm sure that'll be talked to about here as well. We have a great multidisciplinary team, including Tobin Domer, who does corporate. I do intellectual property law. If you guys have any questions on the legal side, please find me afterwards or grab a card. But in the meantime, thank you so much for coming. Without further ado, please.
And I'll pass it over to Mark. Mark Albertson is a Silicon Valley journalist, is going to moderate this panel. He's moderated a few of our panels and is usually great. Thank you so much, Mark.
Well, thank you, Kamala. I'm looking forward to the discussion tonight. Okay, so thank you all for coming. We've got a great panel here tonight. Let me kind of get things started. We've got a large panel here tonight, so I'm going to have everybody begin by just briefly introducing yourselves and why you're interested in this space or involved in what way. The title of it, of course, is Are ICOs really Kickstarters on steroids? I think the answer is yes, they are Kickstarters on steroids, but we want to know more about kind of what's behind that and what it might mean, especially if you happen to be a startup. So, Chris, why don't you lead it off and just tell us briefly what you're involved in and what you're doing in this space.
Sure, yeah. Thank you, Mike. Nice to meet you. And, oh, sorry.
Mark.
Mark. I said Mike. So in our case, the answer is yes. It's a Kickstarter on steroids because our offering is called 22X. It's a token offering that allows an investor to get equity in 30 pre-vetted early stage tech startups with one investment. So it was good for the companies because they get to raise their seed round without hitting Sand Hill Road and getting 99 no's for one yes. And it's good for investors because they get diversity and they get exposure to pre-vetted early stage tech startups. So that's what we're doing.
My name is Mike Bishop. I'm with Proppy. We raised about $15 million in ICO in, I think, end of September. I'm an attorney by education and have advised previously a couple of other successful ICOs.
Hi, my name is Frederick Fortier. I'm with Enigma. I'm an engineer there. We raised $45 million in our ICO. What we're doing is we're building a off-chain protocol which solves some scalability and privacy issue in the blockchain. And in the process, we're also building a data marketplace and a quantitative platform for cryptocurrencies.
Hello, my name is Mason. I'm with Tokensoft, and we have a white label SaaS platform that helps people launch regulated ICOs. We do the wallet treasury management, the KYC and OFAC, and the payments processing and smart contracts and all that stuff. And we support, for all the lawyers in the house, we support regulation 560, 560, regulation A+, regulation S for outside the US. And in terms of ICOs being a Kickstarter on steroids, I think there are, I guess it's more of like a globalized Kickstarter, and it's just opening up the markets to obviously a lot of liquidity that's been sitting in Ethereum and Bitcoin and cryptocurrencies, and also is opening up sort of like overseas like investors to a lot of interesting deals around the world.
Hi, my name is Braden Williams. I helped start a company called Boost VC back in 2012. We are a startup accelerator and fund, and our first area of focus was Bitcoin. When Ethereum or these token things weren't a thing, and actually Bitcoin wasn't a thing at all in 2012. And so we've been doing that for about 4 or 5 years now. Some of the investments include Coinbase, Etherscan, MyEtherWallet, Polychain, about 80 in the category.
Hi, my name's Pierre Wolf. I'm here with the Tierion hat. I run business development at Tierion. We did a $25 million ICO about 4 months ago. I'm also an advisor to several other companies in the space, including Science and a couple of other stealth companies that are working on ICOs as well.
Duncan Davidson at the soon-to-be archaic and obsolete venture fund.
Hey, Duncan.
See you later. I'm here because I love bubbles. I had 2 IPOs in the 90s. I have a Dow 10K hat somewhere in my house. If I had known, I would have bought it today. These are wonderful things. Bubbles serve a purpose. In the bubble in the .com era served the purpose of getting the internet widely adopted and really interesting. Cars came in on bubbles. Everything comes in a bubble. It's human nature. So, yes, we are in a bubble. Whether it's Kickstarter, I don't know. But we are in a bubble. But this bubble, I think, will serve the purpose of paving the rails for the next 15 years based on the blockchain.
All right, great. So let's right here. The thing that I want to start with is I just want to kind of kick off the discussion by referencing a comment made at Money 2020 in a panel session last couple months ago, where one of the venture capitalists basically said that 80% of tokens, ICOs, are going to be gone in a year. And in this very room, actually, last month, we had a panel on Bitcoin, and a couple of the panelists said, no, actually, that number is going to be 90%. So are a lot of people about to lose a lot of money? What's going to happen? I'd like to hear your thoughts on that.
Most of the ICOs should not ICO. But them disappearing is different from them having not done it. So to explain that a little bit, like there's value behind something that's liquid. People just use this right now as a gambling, speculating. People are trading and it's fun. You know, hedge fund managers trading for fun. A bunch of retail investors trading for fun. So because of that, and that alone, I think cryptocurrencies can be here for a very long time without them actually being useful for what their intended ICO is for.
My thought on that is that I don't disagree with that necessarily, but if it's said with sort of a scandalous tone, I don't think I agree with it, because that's just sort of the nature of everything. You know, I've got a book on my nightstand that's titled "Why Most Things Fail." 92% of asset managers don't beat their benchmarks, so they're failing. The majority of venture capitalists also wouldn't meet their benchmarks. Startups have a similar failure rate. So yes, maybe people will lose their money, and so when it's an individual that's putting up his $1,000 into the ICO and expecting to make it big, and he fails and he can't afford it, that's one thing. But if somebody has a basket of 30 investments in something, and that Monte Carlo analysis would show that they're making a return. So, in those contexts, I agree with it, but without sort of the air of a scandal behind it.
Yeah, I'd second that distaste for the scandalous flavor of it. But I think it's not extraordinary that 90% of them are going to fail. It's very similar with just normal startups. I think what's going to be more interesting is, as the regulation does come down a little more harder, what happens to these people like in the U.S. that did raise money from ICOs, that have people knocking, wanting their money back. So I think that's going to be an interesting theme. Is a lot of these ICOs, especially the ones in the U.S., are going to have to figure out, how to do these, do refunds for these tokens, and that's something I think that's interesting that's going to emerge in the next 6 months to a year.
which connects to the regulatory framework because the SEC only gets mad when you screw over the common man. That's when it gets serious. So, but yeah, I mean, I think there's somewhere on the order of 400 new ICOs per week now, I believe that's the number. So, and yeah, majority of those are probably shit. So, but like Mike said, a majority of startups fail. So, it doesn't mean stop investing in startups or that startups are evil. It's just the nature of things.
I agree with what everybody said. That the data says that 92% of all blockchain projects have already disappeared. And that also says that only about 10% of tokens are actually in use for their intended purpose versus waiting to eventually launch. In the history of these type of bubbles, more money is lost during the bubble than after, which sounds funny, but the bubble serves a purpose. The winners emerge and they make a lot of money. So we're going through a culling process to what are the winning models that will go forward. The risk we're all running here is the SEC in its relentless, steady way may crush this whole thing before it gets to the point of really testing the market. We'll probably discuss that later.
All right, well, let's flip it around a little bit. So, Pamela didn't mention this, but as a token of appreciation for your participating in the panel tonight, you each are going to receive $1 million. No, not exactly, just kidding. But let's say you did, and you had to invest it in ICOs, how would you make those investments?
I got called last week by a large European developer that has about $1 billion in revenue a year in their South American division, and they're looking at ICOing a series of their assets and putting the operations on the blockchain. So from my perspective, I'm looking forward to those sorts of businesses, middle market companies or growth stage companies that have they see this as an alternative for their capital, and that may be where I put my money. So it would not likely be the home run of the venture capital, startup, but it's potentially less risky than that as well.
So I think from my perspective, you could break down these ICOs into two categories. One is the security token offerings that are regulated and are admitting that they're securities, and the other is the utility token offerings that have some type of future use in some vision of a future economy where this currency is used instead of X currency for X use. And so for me, I would split it half and half, hedge the bets, half in real assets, tokenized whatever, tokenized real estate, tokenized anything, and then half in the promise of a future global economy where I might be one of the kings of 2030. So,
so I would go with the spray and pray technique because at $1 million, if I put $10,000 in about 100 different ones, I could probably spread the risk enough. All you need is the outliers to win. The other thing is that a lot of the ICOs that we're seeing, there is a way of discerning some of them. There are things that are really extremely scammy, and if you can't tell and you're investing in them, well, you probably deserve to have your money lost. But I think out of the higher quality deals, the ones that have teams that really are strong and really can carry the ball or have done things in the past, I think a spray and pray technique could really work here.
Just gonna take a more idealistic approach, maybe. I'm not sure if this is good advice, but if we consider that the model of crypto economics might work, then we can think about which components are needed for a successful crypto economy in the same way that we know that the current economy needs banks, needs brokers and stuff like that. So a crypto economy will need different components, like, for example, a fast transactional network, a fast computation network, and we can then determine who are the leaders in this space that fill those niche, and perhaps invest in those and kind of skip maybe the ones that are more obscure. And another approach obviously would be to take a quantitative approach and simply look at the trends or use machine learning or something like that to invest more based on the actual numbers and the movement.
Two different ways to think about it. One, if I was doing long-term investment and I had to hold on for a very long time, I'd probably stay with Bitcoin and Ether. I know those aren't like ICOs in the cool terms. Either that or short-term, you can do basic analysis on if it's a low cap sale, it's a good team, and you can get in the sale. Those are very easy flipping opportunities. So everyone who does these pre-sales or anything, once you invest in the public sale, you basically missed it, kind of. I mean, what we've seen is that's not true because everything is just outrageous right now. But the first money in is playing a game here. And they're selling like the greater fool's theory. And people are buying early, selling at a later profit. So if I had $1 million and I wanted to make quick money, that's what I did.
Are you an early buyer?
Oh yeah.
I saw a great little thing went around today that somebody spent 10,000 Bitcoin in 2010 to buy 2 pizzas. That's $100 million, 50 million pizza. I hope it's a good pizza. The theory on the case is pretty clear. I'll just sort of summarize what we've heard. If you're a day trader, buy and flip. Get out as fast as you can, get out that day. And that's a strategy that does work as long as everything's going up and to the right. If you do it very well, you won't get caught when everything falls apart, which means don't follow the Vegas theory of $2 and $4 and don't do that. You'll eventually exponentially lose everything. The other strategy is a diversified portfolio. If you had been, in 1997, you bought 10 or 15 IPOs at $10,000 each, and one of them happened to be Amazon, you'd be worth $8 million today, you would have lost $90,000 on the other 10. And that's probably a pretty good bet. Now, of course, you got to get the Amazon. So there's a couple things to think about. There's been some very interesting categories of ICOs, like identity, Vinnie Langham's Civic. And so you can look at a category and say, my God, this is really a wonderful thing the world has to have. That's more of a long-term bet. So you can make, I can go through other discernible areas of looking at, but everybody here is smart enough, if you're not day trading, to have your criteria to discern this is a good one, this is a bad one. And I think either strategy could work here. The strategy that won't work is probably just willy-nilly investing and seeing what happens. So I'd just be smart with your money.
You know, I'm kind of a busy guy, and I really like what Pierre said, and I also really like what Brayton said, so I would give them half each.
Are you giving out Bitcoin?
And they come to that. All right, so Duncan raised the question of regulation. I think that's an important one to talk about briefly tonight. Obviously, we know, countries, China, South Korea, Russia have taken action against cryptocurrencies. Just yesterday, I picked up the New York Times, and a former SEC regulator was just expressing outrage in the paper over how come the government hasn't started to regulate these as securities and taken action. We know it's coming. There's going to be some form of regulation. I guess the question is that going to be good? And if so, what sort of regulation would you like to see? How would you like to see that play out? Yeah.
Well, I'm of the mind that regulation isn't a problem or an opportunity. It's simply the rules of the game. And what we need is clarity on what the rules of the game are. And so there are a number of regulations on the books. Mason described a number that this system is already supporting. They're there. The question is, how will they be interpreted? And whether they'll be interpreted in a way that is that fosters more of these to take place the way they're happening, or changes the direction and forces people to be more cautious. I spent the last 3 weeks meeting with attorneys. There are a lot of issues here, and it's international issues, and every jurisdiction has a regulation interpretation issue. So they're there. There is no lack of regulation. So I'm not advocating that we add to it. I advocate that we get clarity on the ones that are there so that we know what the rules of the game are.
This is obviously a deep topic. We're in a law firm. Shepard Mullen probably has somebody looking at this. There's a guy over at Cooley who's done a lot of work on coming up with a SAFT, S-A-F-T, which you guys are all familiar with, I'm sure. And then he went to the Cardozo Law School and flamed him and ripped it to shreds, saying the SAFT is actually less safe because it highlights the security nature of the token. Deborah Royce in New York has done something with Unisquare Ventures. You should all read this stuff. There's a white paper out there, how to get around the Howey test and all the SEC stuff. Rather than going through it all, it's worth reading the material out there. It doesn't take too long to deal with it. My view about this is the following. The SEC will be relentless in crushing this whole area. They're not going to do it China and just ban it and see what happens. They're going to sort of step-by-step correct it. And they probably are right in doing so, because this is the one case. Who mentioned protecting widows and orphans, or the, I don't forget what it was, common people. Whoever they are. You guys all common people? Yeah. No, you're in Silicon Valley, forget it. Nobody here is common. But I think they're right in having this. My fear is the overreaction to this bubble blowing up will be as bad as the overreaction to the dot-com bubble, where we basically killed the IPO, the small IPO, to save it. Right? How smart was that? My conclusion after not spending enough time there, this sort of hypothesis, would be that we probably need a different regulatory scheme for this than SEC. These aren't really securities. You have no ownership in the company. You're getting no dividends. It's not like that. It can look like that, but that isn't really what it is. So it probably needs to be regulated in a different fashion. And I'm just afraid if we crush it quickly, our wonderful Congress never figure its way into the right regulatory scheme. There you go.
I'd like to add just one perspective here. It might be a little bit different, just zooming way out and looking at the history of humanity. I think that the regulations that come in from any jurisdiction, be it the SEC or some other foreign jurisdiction, you can look at it as kind of the old system resisting the new system. I mean, I've seen so many projects in the blockchain economy that replace some of the core fundamental value that government delivers, like, for instance, emergency response. There's a company that just completed a successful ICO that replaces 911. And also, when you look at smart contracts in general, you know, a lot of that can replace the court system, another fundamental component of government. So having smart contracts with a third party, you know, trusted third party, can completely circumvent the courts. So, I mean, there is a potential in the future of humanity for something completely different than what we now call government to evolve. And, you know, this short term is a good question, short term, but long term, I think the actual concept of government itself may dissolve or become something different.
Yes, so I'm gonna preface everything I say with, you know, I'm not a lawyer. This is not legal advice, and what I say is not law. And I think that so we only work with, you know, regulated token sales, and we think that's actually a good thing in terms of like managing risk. And so, you know, personally, I wasn't comfortable getting into the space until there was a little bit more clarity on how these worked and how they were supposed to be regulated. And that sort of happened over the summer when the legal opinion on these things started to mature a little bit. And so, and I think we're getting to a point where we almost are getting the clarity that we will soon have the clarity that we need. That'll probably be like within 6 months. But I think regulation is probably a good thing. Generally, I see it as, you know, it filters out a lot of, you know, the bad actors that should not be doing these token sales, because it sort of raises the bar and the barrier to entry. And I think it does help people launch in sort of a cleaner manner and make sure they're doing a little bit more due diligence before they actually, you know, launch a token sale. Because a lot of these token sales that are launched a little bit more hastily without proper, you know, legal representation are breaching, you know, a majority of these security laws. And I'd prefer that, you know, sort of like clean up from a personal
So
perspective.
can I ask you to expand on that? 'Cause I think you're talking Reg A plus and on a regulated exchange for the exchange of the token. Is that right?
Yeah.
You're talking about there is a regulatory scheme. Is that the one you're talking about?
Yeah. So
You might. Do people know what a Reg A or Reg A plus offering is?
No.
So these are good terms to Google because the explanation could go for a while.
It's a cheap IPO. It's a cheap, simple IPO up to $50 million. It's very cheap, very easy. And the token can be publicly traded. You can sell to widows and orphans, but it has to be exchanged on a qualified exchange. There's one that exists right now, Reg A plus.
It's probably the coolest way to ICO. There's two orphans.
There's also the so there's something called like Regulation D and Rule 506C of Regulation D, and so 506D is typically the private portion of the pre-sale, and there's a lot of documentation with that. There's terms, risk factors, a private placement memorandum, and there's SAFT as well. And then there's usually like a 50K minimum. The 506C is the public portion of the sale. There's usually no minimum, and for all those there is investor accreditation, KYC, AML, all that stuff. And then Regulation S is usually for outside of the U.S. There's only one law firm that we've worked with that can do this. And Regulation A plus is like a 506C without investor accreditation, essentially.
With a cap, 50 million.
Yes, yeah.
All right, great.
Well, I just want, I think that's very helpful. The problem I have, so for all of you here trying to do this, you go through the Reg D route, accredited investors, you can't exchange the token. You fall under rules, it's gotta be like stock, restricted stock. If you get certificates from venture people and all that, restricted stock, you can't trade except Rule 144, blah, blah, blah. So that gets you, the token gets out to accredited investors but can't trade. And all the fun is swapping into Ether or Bitcoin and making a mint, right? So you want to sell it. Reg A Plus allows you to be a widow and orphan and buy this thing in the public markets and then trade it on a registered exchange. So it's more like a public, more what an ICO is meant to be.
What exchange is that?
I forget the name. There's only one so far I know of. It's some scab little exchange, but I got qualified with the SEC. Who knows? It could be yours. Is it yours?
Sorry. One correction. You're taking this just as a U.S. issue. So you don't have this situation for people abroad. Different jurisdictions. Some have only 4-month holding periods. Only U.S. accredited investors have a 1-year holding period before they then have to divest of the entire holding before they can start trading it. So I think that this is, when we're looking at these ICOs, the activity is really not just limited to the US, but really a broad-based, and actually that's what makes it interesting. You can do $100 million because you're getting the whole world, not just the US.
Good point.
Yeah, I think the interesting thing is it's sort of forced us to take crowdfunding global. Because not until like this summer did we have the motivation to figure out these laws on a global scale, and I think that's sort of interesting about all this.
Well, great. Well, let's bridge into that. You talked about crowdfunding. As we know, many of these offerings are actually designed to raise funds in some cases for startups. I interviewed a CEO of Kik, Ted Livingston, a couple of months ago, and he was open about it. He said, yeah, my company was really struggling, and I floated this ICO, and now I'm able to compete. Interesting tack. Where do you think this is going to go? Are we going to see more companies doing this? Is this a good idea? So I'd be interested in thoughts of the panel on this particular trend.
Can I speak as a venture person?
Yeah.
Okay, this is such a wonderful market, ICO. $3 billion as of the end of September. I don't know what it is now. It's probably $4 billion. So there are more ICOs in the first 9 months of this year than there were internet seed-funded companies. So the ICOs beat internet seed funding. The ICOs have almost equaled all US seed funding as a class. And there's if you trend this thing out, it's going to start getting into the Series A territory pretty quickly. So it's becoming an alternative to funding through the venture community. That's why I started off saying, goodbye, I'm gone, it's archaic, right? The venture guys are done. The good news for us is that about half of the really good ICOs have venture backing. So a lot of the people do a process where you first get venture backing, you get real, the token's about to get used. It's not some white paper with 3 years to go and they can run off in the woods and never do it. It's real. And you take venture money to get there, then you do the glorious ICO and off you go.
Man, I want to get against you on this. And I'm going to be controversial. All right,
good.
So, all right. First of all, No, so the Kik situation is really interesting. So they were considered a relative, and I'll use the term relative, failure in their ICO. Their expectation was to raise $125 million. They came up at a mere $97 million. So 97 is a big number, but it wasn't $125 million. And up till Kik, there hadn't been any big ICOs or popularized ICOs. that came up short. So it was a milestone that we saw the first high-profile one come up short. So that's one issue. The other thing with Cake, it had visited a lot of VCs. It had raised probably about, I want to say, in the 80 or to $100 million already in VC funding. Was not able to raise any more. Their growth capped at 18 million users. So should this company have been able to raise? Frankly, I'd probably say no. They should have died a graceful death or pivoted their model. So the notion that they went after the ICO, I think, was a fashion move, and it worked for them. As far as companies getting VC money leading into the ICOs, it is happening. But what we have to understand is that we're still not seeing the quality there because 99% of the companies doing ICOs right now do not have a product in market. We have no idea if there's product market fit. Now, in a VC parlance, normally a seed deal has no product market fit. But by Series A and Series B, you've got real product market fit. You have some sense of whether this is going to succeed. When you see Filecoin doing $252 million and do not have a product in market, you have to scratch your head. There are reasons why it's happening, and there are reasons why it's working, or why they're able to do this, that have very little to do with product market fit. So suffice it to say that that's happening. The VCs are getting into it because this is a lot of money. I mean, what you're talking about is a big number. And so they can't sit on the sidelines. I think the best ICO investors actually are seed investors because they're accustomed to investing in dreams that may never go anywhere. And so that's what's happening with ICOs. These are dreams until we see something. So 99% of the ICOs do not have a product in market, nor are planning to have one within the next 6 months or 6 months from the time they launch their ICO. So think about that for a while. That's a lot of money going out there. I started paying attention to ICOs when the first company that raised $5 million in an ICO. Because as an entrepreneur who had raised money through VC channels, I knew how hard it was to raise $5 million. And here people were doing it with a white paper, not even a business plan. Not even an executive summary with market analysis on white paper. So suffice it to say, it is a little crazy. But I think the future of this is that as we start to see companies that actually have working businesses that can start to take advantage of these business models, that to me is the most interesting side of this. That it's not what's happening now, it's what happens after the bubble bursts that's going to lead to a really neat path.
Yeah, and then I think another aspect of that, just tacking on to the end of that, besides just the stage of the company where it's just an idea and a paper, is the fact that I think a lot of the companies that do the ICOs, like you were kind of alluding to, were just chasing the amount of money that's being thrown in there. And I can say, coming from my company just popped out of the 500 Startups Accelerator. So I could say that, within the companies in the batch, everyone's like, how can we make a token in here? Like, how do I put a coin in my business? It's like, dude, your business has no reason to have tokens. That's an enterprise business for banks. Like, there's no token there. But I think that what's really interesting is the companies that where a coin or a token or a new currency or a token that represents something is actually interesting to that industry and that business model. Those are the ones that I would invest in. Those are the ones that I think have a business doing an ICO, not ones that are just chasing it because, like we alluded to, they couldn't raise a Series B or whatever. Yeah, in my opinion.
Everyone is solely focused on the sale. All these companies, it's like they're not worrying about building product. They're not worried about anything. It's like sale number one. And it's all about dollars raised. I think the narrative needs to change to kind of distribution of the token. The token is really good at bootstrap a network. And that was one of the reasons people started with cryptocurrencies, was bootstrapping a network. Like, it's hard to start your own money. How did they do it? Like Bitcoin, how did they do it? A mining network. People started getting it. So then people started doing it for a bunch of different things. And the example everyone uses is like, what if you owned a little piece of Twitter? Or would you tweet more? So things like that. We need these cryptocurrencies in more people's hands, specifically the users of the eventual products. Again, right now, everyone's focused on sale, money raised. Even as a VC, that would probably mean don't go to all the VCs and do this big pre-sale round with a bunch of VCs where they're not users, they're just going to hold your tokens in their safe and they're just looking for an exit event. So I think the mindset has to change.
Sorry. And I just got to say one more thing on that. That it's exactly, there's a big conflict. I mean, think about this. you're doing this token because it is supposed to be a useful token for a particular product or service. And now you're bringing in speculators who are not in it because of your product or service. Actually, they act in the complete opposite interests of your product and service. All they want you to do is to pump up the value of the token, okay? Because they bought it to get an increase in value. So when the SEC starts getting concerned about the security versus utility issue, it's a legitimate concern. Most of the people who are buying these tokens, even the early investors, are by definition investors.
Yeah,
They are
that
not
fails
users.
the Howey test that
Right.
you mentioned earlier.
And this is the problem that we're seeing. And so if the SEC comes down and says, hey, this is not going to be, this is not kosher going forward, there is a good reason for it. They're not just making this up to stifle the market or kill it.
Anyone else on the panel? Interested? Go ahead, Fred.
Just going to talk again maybe from a more, just take a step back and talk from the perspective of an investor, individual investor who started with Ethereum early on. And just to maybe bring some context, like initially the ICOs were a good way because you could start with some Ether and invest it and kind of diversify your Ether holding to kind of have a right to vote on how the platform would look like. So for example, if you use your Ether to buy some Raiden or to buy some 10x or some Enigma, whatever, then you're voting on the way that the platform will look like you're voting on off-chain transaction processing system. So like I think the ICOs started like that, and then everyone else got involved and it got crazier. But the idea that Floyd Mayweather would have an ICO or Kick, that wasn't part of the original spirit. I think these are just companies taking advantage of the process.
I want to make a legal comment without being a lawyer, okay? What we just heard here was exactly something you should all think about. Under the so-called Howey test, which is not very complicated until the lawyers get a hold of it, one of the things you can do to avoid being a security is to have the people who own the token participate in the system. It's almost like open source. So whether you understood what he really was getting at, that would break the SEC's stranglehold on you. So if the people with the token voted or participated to try to do something beyond just holding it to make a killing.
For Ethereum. So what he
Well,
just
he can
said
do
was
it-
for Ethereum.
I understand, but you can do it for any token.
Well, that's how the DAO worked, right? It was a giant. That's the counterexample. That's how the DAO worked. That was it was a giant investment pool, and people could vote on how the
And
money.
the
was
SEC
going to
went
be
after him
invested.
anyway.
Yeah, so that was the
That's a
SEC.
scam and a fraud, right?
No, it's a security.
But it did
It's all
exactly
part
what
of
you
it.
were saying, right? And the SEC actually had an opinion
Yeah,
that said, that probably was a security and shouldn't have been, launched in that manner.
So one other comment. For those of you who, we have a little bit of gray hair, right? Those of us who were around in the 90s remember there are all kinds of scams. The greatest cartoon I saw recently was Nigerian scammer loses all their money to a Bitcoin scammer. Yeah, it's funny. The internet went through this. It's still going through this, and it still exists as the internet. So there'll be a lot of Bitcoin scams too, but that in itself I don't think will kill the ICO business. But I think the point here is that the participatory method of voting doesn't get you around securities law, then the SEC will be relentless, and you should probably do the Reg A right now just to be safe. Reg A.
All right,
Sounds like a
let's,
song.
we're going to take questions in just a second. I just have one more question for the panel. And this is kind of a little broader perspective, just to kind of open it up a little bit. I pulled just a couple of facts before tonight. China, as we know, pretty much owns the vast majority of all Bitcoin mining. We also know that Japan's regulated exchanges control about 60% of the market right now in cryptocurrencies. So for a currency originally started as Bitcoin, it was supposed to democratize the financial system, to get it out of big monopolies and conglomerates controlling wealth. It seems to be moving toward that model. Am I mistaken? And is this kind of scenario with ICOs a possible way that might change that?
This may only be tangentially related to what you said, but I think it also addresses what was just said before and maybe ties in together. It does seem ironic that the blockchain is meant to decentralize and fragment ownership, whereas ICOs are all about centralizing and consolidating ownership. So in the good old days, the early stage investor gets a proportionate piece of the enterprise, and now with an ICO they get zero interest. So it is either pure speculation or hoping that, or their natural customers that are using the platform. So I think that is interesting if there's a long-term sustainable model for this going in line with sort of the evolution of society and economics, where you've got some decentralizing technology like blockchain. There should be some strong ownership rights for the token holders, and it would be curious if cryptocurrency owners all end up being, the establishment, and like you just said, and not to the common man. So I'm especially interested in what libertarians think about that, and venture guys on the other side, where they have a large stake traditionally in companies they invest in.
I think so. Initially with the ICOs, it is like highly democratized. You have people from around the world investing in these ICOs, or theoretically, it's democratized fairly well. And so you have a lot of people from different backgrounds interested in your project, and that have different opinions on how it should turn out and how it should mature. But because the liquidity isn't that high, it's very easy for a single player with that's very well funded to come in and take a majority of interest in that token, especially if they're driving the price up as they're buying, because the order books are fairly thin. So I think ICOs are suspect to high centralization, and so I think that's something that we could see happening as the ICO market matures. At the same time, that's exactly what happened with Bitcoin. Initially, it was highly democratized, and then it became very interesting to several parties, and so they started to sort of monopolize the mining aspect of it. But as a company internally, we're seeing this sort of shift as well. I guess the great marketing that has been done for Bitcoin has made it so a lot more people are interested in Bitcoin mining and different aspects of it, and so we're seeing some sort of really big players get interested in the mining aspect of it, and that are looking to take this sort of to the next level. So I think it's going to be sort of a sinusoidal effect, where it will perhaps decentralize over the last few years, but over the next few years, because of the general interest and because it is actually profitable to mine, it will become more and more democratized. So I think this stuff is always sinusoidal.
So I take a little different perspective on this, because there's a really good research firm called CV Insights, and CV Insights often does analyses of industries. One great example is they took Wells Fargo's homepage and they broke out all of the startups that are attacking one specific item within Wells Fargo's portfolio of products. So that is a decentralization of a banking industry. And so they're breaking it apart and they're showing. However, I think as we view a capitalist system, over time, it's a grow or die model, which means that as companies grow, they either build out more and get bigger, or they acquire their competitors. So when I start to look at decentralized models, I never feel that they are stable models. I feel that they are very unstable models, looking for the next point in stability. And so what's happening right now is we have this notion of blockchains and all of these different participants, but as a miner gets big, and they reach a certain point, they either build up more or they acquire a competitive miner. And so now there's one fewer miner in the game. Eventually, you get to a point where we have three behemoths. When Amazon started, they were not the dominant participant in the marketplace. When eBay started, they were not the dominant participant. They became that. And so, again, I think that we're going through these cycles. As for ICOs, the decentralization, or rather the democratization issue there, is that the value that's being addressed in an ICO is not the value of a company, it is the value of a network. And so we're not talking about whether or not people have ownership in companies. A network is about the activity, the economic activity taking place and putting a value on that network. So when someone like Union Square Ventures views ICOs, they view it as participating in something that is actually bigger than any single company who is a participant in that network. And so they're trying to access a range of upside that is not traditionally available to most investors. Most investors are investing in a company and the possibility of that company getting big and the percentage they'll own of that company. In tokens, it's about the network. And so when we look at Filecoin, we're thinking about the network of storage, not about the company, who's it, Protocol Labs, who is the company that created that thing. And so that's really the dichotomy or the difference in what I'm saying.
Oh. That was the most brilliant thing I ever heard you say. You said a lot. No, you said a lot. He gets applause for that. What he said is profound. If we're not investing in a company, we're investing in a system.
Yeah.
And they haven't had a chance to do that before, and all we created were monopolies like Amazon, not systems. So I applaud you for that. We're going to take a little heretical view. I was challenged over there. Either a venture capitalist or a libertarian. Oh my God. I can't be both. Okay. A funny thing about this. I think the HTML, the web, was the internet for people. So that was 25 years ago. It's an amazing invention on top of the TCP and the protocols. I actually think the real potential of blockchain is the internet for machines, not people. We sort of get caught up in Bitcoin as gold or money. I mean, I'm losing sight of what it really is. Ether did a good job of creating little distributed apps. What do people call it? DApps? I don't know. Won't catch on, but distributed apps, okay. But the idea is that instead of a smart contract being smart, they're pretty stupid. They're actually really dumb, but they're automatic. So you get a contract which when the conditions are hit, bam, it happens. No human being, no lawyer, no fence in this place. It gets rid of a lot of transaction costs. And it's really good for a machine. The example I usually use is a self-driving car has got to park somewhere. How does it go into a parking garage? You know, the big burly guy, always a big burly guy in the front looks at you. What are you gonna do? You want the gate to go up bottom. So you do a little distributed app that says, I bid on this spot, I agree to pay 3 whatever tokens, and bam, I'm there. And then when you're done, you leave. It's just a machine-to-machine transaction, no human beings. Very low transaction costs. I think, therefore, blockchain creates this huge future of all this automation going on while we go on with our lives. And it's been lost in a lot of discussions about Bitcoin and money and tokens and ICOs. That's what we're building. And just like in the 90s, we were building the internet for everybody, this is the early days of building this incredible future. So a heretical view. Now, this future, in a sense, is not libertarian or progressive or anything. It's politically neutral. But it's an incredible achievement for mankind to have all these little machines run around, do things in the background. You don't have to talk to them, they don't have to talk to you, and they work. And just getting that to, like, it's hard enough to get your screen and your projector and your pencil work at home. It'd be great if they all work, right? So I think that's what we're building. And so you imagine a token. So the example I gave, have a parking token, whatever you want to call it, park coin. And you could launch this thing if you had the system in place where the cars are talking to the garages and the coin gets transferred. It's very easy to visualize that, and it's very useful. And with the SEC call that a security. If you launch it correctly, no, because that's just a prepaid parking spot, right? It's like a gift card or something. It's not like a stock. But we're not there yet. We first have to go through the early days. We got some amazing people here building some of the infrastructure to do this. Whether it's Reg A plus or something else, it's in the long run not going to matter. So I think that's what the potential here is. And does it get decentralized? Not in the way we talk about as libertarians or non-libertarians. It gets decentralized because all this stuff happens in the background we don't have to care about. There's no government, there's no lawyer, there's nothing. There's cars talking to garages and it works. A lot of cars.
Just a quick technical aside, maybe, if that's interesting. Because you mentioned Bitcoin in China being controlled by Chinese miner. Just to be aware that Bitcoin uses an algorithm called proof of work, which is a bit of an issue because someone could decide, like a big government entity, could decide to come and buy a lot of mining equipment, without actually holding Bitcoin. So they could buy mining equipment, control the network, sell the Bitcoin. But there is advance in this field. There's another algorithm called proof of stake, which is a bit more promising because if proof of stake is being used, then people have to own the currency, so they can't as easily control the network with malicious intention the ones that have to own more than half the currency. So there's some technical progress being made to circumvent that issue.
And the industry is really good at self-regulating. Like we've had many times, since I've been in crypto, where a mining pool almost reached 51%, and either miners swapped out or people volunteered to move up elsewhere. There's other examples where we can fork code if it's not going the right way. With software, we can make changes pretty quickly. So we just saw Bitcoin Gold to try to prevent miners from taking it over. So there's a lot of examples of keeping decentralization alive.
Yeah, good point. Okay, we have time for one or two questions, so I'm going to be kind of the mic guy here and hand you the mic, and please keep your question brief.
Yeah, thank you. Andrew, so question is, if utility token assumes that there should be lots of users, should be some market, actually it becomes impossible to create this market overnight. So it's like a problem for launching utility token because there cannot be any market created overnight. So they will all be essentially security tokens for investors.
So market, security tokens, how do you see it?
Yes, you're right, and that's a very, very common problem. So it's sort of a chicken and the egg problem. So the only companies that can actually pull that off are companies that have existing apps. So Kik is actually a company that could pull that off because they already have a user base. They can figure out how to integrate the tokenization layer underneath that and roll their users onto that platform. So I think that's probably a very good red flag when looking at these ICOs is does the platform actually have users? Is it running? But yeah, that's spot on.
Other question over the back here.
Thank you. So if public sentiment says 98% of ICOs will fail, vaporware, scams, or frivolous, what are you doing to show or prove that the ICO companies you're investing in or launching aren't?
Okay, so where's the proof? Where's
Well, so the company I work with, Tierion, we did the ICO and launched the product literally a week or two after the ICO was completed because utility was important to us, and before launching the token, we had to make sure that the platform was ready to go. So we did the ICO and the system went out live. I'm advising another company that we're actually, they are now closing customers and actually building out the network in advance of doing an ICO. So this is a new company with a really innovative product and an innovative network. But before doing the ICO, we're actually forcing them to go through the process of getting customers, showing product market fit, so that there's actual utility once they do the ICO. So that would be it.
Two really important things for us. Every startup investor would say this: team is everything. But the thing on top of team would be, why are they doing it? There's a lot of people here doing it for the wrong reasons, and getting to know someone and figuring out why. So I see 5 new ICO pitches a day. Most of them are all the wrong reasons. So there's signs like, have you been in cryptocurrency for a while? Like, do you really understand what this is? Those are the things I really care about. And just on a broader spectrum, like, they can do really good as a team and have a really good reason, but raise way too much money, and you still would not participate. So we're actually taking somewhat of a step back right now.
So for us as a company, there's only, we sort of have to do like a little bit of a risk analysis. And so there's only about 4 law firms that we will work with. So a company has to be partnered with one of these 4 law firms, and those are the only ones we're comfortable working with because we know how they do things, we know how they're thinking about things, and they are as risk averse as we are. So that's one thing, and usually the cost of any of these 4 law firms usually scares away the people that shouldn't be doing the ICOs. So that's one way. But at the same time, I think cost is probably the best filter, actually, because it's the teams that shouldn't be doing the ICOs that can't go raise the funds necessary to actually pay the cost of the token sale. So it's sort of self-selecting in that manner.
And I'll take this moment to do my little pitch for our token offering. We're actually the anti that scam, because when you invest in a security token like ours, you're actually getting real equity. In our case, 30 real companies that exist, and you can do your own research and due diligence on them as well. So I mean, there's no way for that to be a scam. And there's a lot of those too, security token offerings that are backed by real assets that you could get your hands on. And then when it comes to a utility token, I think that's up to the investor themselves to think for themselves, okay, is this really going to have value in the future? Do I really see this going somewhere, or is this company just trying to raise a bunch of money and ride the wave?
Anyone else on the panel for that one? Okay. I think I'm getting a sign here that we're probably going to have to wrap this up here. So, first of all, I would like you to please give a warm round of applause to these great panelists.